Hello everyone. Today we are here to discuss financial management third semester SAP batch. It's very important question for 14 marks. Mandatorily they will ask 14 marks question. So here we have one problem. ABC company has currently an all equity capital structure consisting of 15,000 equity shares of rupees 100 each, which means ABC company it has started its business with the help of 15,000 equity shares of rupees 100 each as a face value. In continuation, the management is planning to raise another rupees 25 lakhs to finance a major program as its expansion, and it is considering three alternative finance. So here we have three alternatives in order to raise another 25 lakhs rupees. So totally one by one we'll discuss. First one, to issue 25,000 equity shares of rupees 100 each, which means entirely the ABC company is issuing in the form of equity shares, that is entire 25 lakhs in equity shares. Then second option, to issue 25,000 8% debentures of rupees 100 each, which means entire 25 lakhs they are issuing in the form of debentures. In the third option, to issue 25,000 8% preference shares of rupees 100 each. Entire 25 lakhs they are issuing in the form of preference shares in third option. Then, in continuation, the company expected earnings before interest and taxes will be rupees 8 lakhs. So, here earnings before interest and tax means EBIT. So, here EBIT we have to take 8 lakh rupees for each option. And in continuation, assuming the corporate tax rate of 50%, and they are asking us to imagine 50% as tax rate while we are deducting tax from EBT, then we have to take 50% as tax rate. The next they have given determine the earnings per share in each alternative and comment which alternative is the best and why. So first we have to identify how much is our EPS. Then next we have to comment which option is best in all three options. And we have to suggest why it is best. So first we'll start with the solution. We'll take a heading calculation of EBIT EPS analysis. So divide columns into four. First column will be particulars. Second column will be option 1 equity shares, and third column will be option 2 debentures. Then fourth column will be option 3 8% preference shares. Totally we have four columns: particulars, equity shares, debentures, then preference shares. We'll start with EBIT as per our format. EBIT means earnings before interest and tax. So here EBIT we have to take 8 lakh in all options. First option 8 lakh, second option 8 lakh, again third option 8 lakh. So EBIT will not get changed for options. Totally we have three options, three alternatives. So three options at a time we have to take as it is 8 lakh, 8 lakh, again 8 lakh. From EBIT, we have to deduct interest. So interest will be always calculated on debentures. In the problem, they have given in the second option 25,000 8% debentures of rupees 100 each, which means 8% debentures present in second alternatives. So here whenever we are calculating interest on debentures, we have to keep in our mind interest will be charged only for debentures, not for equity shareholders and not for preference shareholders. For equity shareholders and preference shareholders, we will provide dividend, not interest. So from EBIT, we have to deduct interest. Interest will be 8%. In the first option, if we see entirely 25 lakhs, they are issuing in the form of equity shares. Now, so in the first option, we have to mention nil. Second option, we have to calculate interest. How much is our debenture amount? 25 lakhs. Entire 25 lakhs they are issuing as a debentures. So 25 lakhs, on 25 lakhs we have to calculate 8%. We will arrive at 2 lakh as debenture interest. So we'll mention 2 lakh as debentures. Then from EBIT, if we deduct interest, that is EBIT is 8 lakh, 8 lakh minus of 2 lakh, we will get 6 lakh as EBT. Then in the third option, we don't have debentures, completely it is 25 lakhs as preference shares. We don't have debentures, so we are here also we will gonna mention nil. First option nil because no debentures. Second option we have debentures, we have calculated interest 2 lakh, and in the third option we don't have debentures, we are calculating as nil. So we'll write EBT. EBT how much? In the first option 8 lakh as it is, we don't have debentures. Then in the second option, yes, we have debenture. So we have calculated 8 lakh minus of 2 lakh interest, we got 6 lakh. Then in the third option, 8 lakh as it is because there is no presence of debentures. Then next one, clearly in the problem they have given tax rate is 50%. So we have to deduct 50% tax. So tax will be always calculated on EBT. EBT means earnings before tax. So from EBT, that is 8 lakh, 6 lakh, again 8 lakh. So 8 lakh on a first option, 50% if we calculate, we will get 4 lakh rupees. In the second option, if we calculate 50% on 6 lakh, we will get 3 lakh as tax. Then in the third option, on 8 lakh, if I calculate, we will get 4 lakh as tax. So now we'll deduct EBT minus of tax. We will get EAT, that is earnings after tax. So now 8 lakh minus of 4 lakh, we will get 4 lakh, that is earnings after tax. In the second alternative, 6 lakh minus of 3 lakh, we will get 3 lakh as our earnings after tax. In the third option, 8 lakh minus of 4 lakh, we will get 4 lakh as earnings after tax. Next one, we have to deduct preference dividend. If there is a presence of preference shares in any of the alternatives, we have to check. So in the first option, in the first alternative, we have to see entirely they are issuing in the form of equity shares. So then here for us in the first alternative we will get nil. Why? Because there is no preference shares. In the second option again entirely they are issuing as debentures. Again we will put nil in the second option. In the third option, yes, we have 8% preference shares. So here we have to calculate 8% preference dividend. So in the third option, so entirely 4 lakh, on a 4 lakh we have to calculate our preference dividend. Preference dividend, how much it comes? So 8% means on a 4 lakh it comes to 2 lakh. Now after deducting preference dividend from earnings after tax, we will get earnings available to equity shareholders. So how much is our EAT? 4 lakh, 3 lakh, again 4 lakh. From 4 lakh, there is no preference dividend in the first alternative, nil. Same as it is, we will get 4 lakh. In the second option, 3 lakh. So here we don't have preference dividend. So as it is, we will take down 3 lakh. In the last third alternative, 4 lakh, we have EAT, earnings after tax, but we have preference shares in third alternative, so it comes to 2 lakh on a 25 lakhs. We are calculating 8%. So if we calculate 8% on 25 lakhs, preference share dividend comes to 2 lakh. If you want, you can calculate 25 lakhs. On 25 lakhs, you have to calculate 8% as a preference dividend. You will comes 2 lakh. So now earnings available to equity shareholders, EAESH, earnings available to equity shareholders. That is, in the first alternative 4 lakhs, in the second alternative 3 lakh, in the third alternative 2 lakh. Now we have to divide earnings available to equity shareholders with number of shares. Here, every students will get confused while calculating number of shares. How to calculate this number of shares? Very simple. First, we have to check, do we have existing equity shares in the problem? Here, ABC company is having existing 15,000 equity shares. So this is existing equity share capital will come same as it is for all three options. The first option will see existing equity share capital is 15,000. So in the first alternative we have to check 25,000 equity shares of rupees 100 each, which means in the first option entirely we have equity shares. In this case we have to add 25,000 is new shares and 15,000 is old shares. Now old plus new, totally it comes to 40,000. So now number of shares in the first alternative is 40,000. How come this 40,000? 15,000 existing shares and 25,000 is new shares. Totally it comes to 40,000. Then in the second alternative, how much is our number of shares means? We have to see here. So 25,000 debentures are there. When there is a debentures, we don't need to take it as a count for number of shares. Only we have to take into consideration of equity shares. So now only existing equity shares will come here. So entirely that 15,000 existing equity shares we are gonna write here. Next, the last option, same Wilshire. In the third option, 25,000 preference shares they have given. Listen in here carefully. In the third option, they have given preference shares, not equity shares. Only in the first option, they have given equity shares. So I have taken old plus new, existing plus new. Here in the third option and second option, they have not given any equity shares. So in the third alternative, again it comes to 15,000. Entire 15,000 equity shares I am writing here. Now what we have to do? Earnings available to equity shareholders divided by number of shares. We will get earnings per share. So now what is our earnings available to equity shareholders in the first option? 4 lakh divided by 40,000 is our number of shares in the first alternative. 4 lakh divided by 40,000, it comes to 10. 10 is our earning per share in the first alternative. In the same way, second option, 3 lakh we have earnings available to equity shareholders. So 3 lakhs divided by 15,000, we will get 20. So in the second option, we have earning per share is 20. And in the third option, we have 2 lakh. 2 lakh is our earnings available to equity shareholders. 2 lakh divided by 15,000, we will get 13. Now our earning per share in the third option is 13. So in the first option 10, in the second option 20, in the third option is 13. Now we have to suggest the ABC company which option is best. So when we saw EPS in all the options, so which is highest? 20 is highest in the second option. If the company go for issuing 8% debentures, then company will get 20 as earning per share. Now we have suggesting a company, they can go for alternative 2, that is 8% debentures. Why? Because earning per share is 20 we are gonna get compared to option 1 and option 3. That is our alternative 1 and alternative 3 is having less compared to option 2. So now option 2 is the best, and why? Because EPS is highest. Now we have to write a note. So very simple, as earning per share is highest in option 2, that is our alternative 2, we are gonna give second option is best, that is debenture, 8% debenture. So clearly you can write as earning per share are highest in option 2, that is 8% debenture financing. The company should opt option 2. So this is very easy. So this is 14 marks question, must and should they will ask in an examination. So for that I have explained. I hope, I feel like okay you will gonna understand. Still if you have any confusion or else if I am making any mistakes, you can get back to me or else you can comment. So if you want any 2 marks question answer or else 6 marks question answer or 14 marks question, you can comment and I'll gonna share. If you want 2 marks means you can mention in a comment box 2 marks, or else if you want 6 marks means you can mention 6 marks in a comment, or else if you want further more clarification on this 14 marks question, you can raise your questions and I'll gonna clarify all your doubts. If I am making mistakes means even you can correct. You're open to give suggestions, and thank you all.